Doesn't matter if you have just lost 5 trades in a row, 10 trades in a row. What should you do? Should you fuck off your strategy and get a new one? Should you stick to your strategy? What are you going to do? And in this video, what we're going to do is we're going to cover that, and I'm going to explain to you why losing X amount of trades in a row does not matter, and it is literally just a part of your trading and something you need to be able to deal with. And we're going to do that with a free tool that I've made, and there'll be a link to the tool in the description so you can use it for yourself. Let's get to it. So we are now on the tool, and this is simply just a tool where you can put in some specific input, so the data about your trading. So if you want, you could either put your actual trading data, or if you want to play around with it, put in anything you want really, just to see what you need to do to get consistent, or just to look at different drawdown variables. But like I said, I'll put the link to this in the description, and I'm going to show you why drawdown doesn't matter using this tool. Right, let's have a look. So first off, we've got the account size of 100k. You know, that's standard. Most people that go for the prop firms, most people that start are fixated on that 100k account. So we'll start with the 100k. We've got a strike rate of 40%, which is interesting because a lot of social media, a lot of the Instagrams and TikToks and all that are probably 40% strike rate. But in truth, this is actually a very reasonable strike rate that you will have. And a lot of the higher strike rates that you see going around socials are just shit. You know, they're not true, that it's all made up. You can have higher strike rates, I'm not disputing that, and in a bit we'll change it to a higher strike rate to see that the principles I'm about to lay out still apply. I'm just saying that having a 40% strike rate is completely realistic, it's completely reasonable, and if you have one, as you can see down here, you can still make money, so there's no need to worry about it. Some of the best traders that have ever lived have only had strike rates around 30 to 45%. So should you need to worry if yours is this low? It's not low, but if you have a strike rate like this, no, you don't worry, okay? You relax. Send it down, 40% is fine. Average profit win, I've gone for 3%, and obviously the loss is minus 1%. That's pretty standard. If you haven't heard the only risk 1% rule, then fuck me, you must be new to trading, which is fine. Here we go, only risk 1% of your account. If not, yeah, this is a standard 3-to-1 risk to reward ratio, which most people aim for anyway. And I've put average trades per month as 10. Now, I know that a lot of people take a lot more than 10 trades per month, and I might use this tool as well to show you why as proof to why they're not actually profitable, because the numbers you'll achieve are ludicrous. But anyway, time period, we've got 1 year, so I'm just going to show you the results over 1 year. And as we can see, we've got a little tick to spin at the top, because essentially how I've done this is it's all based off probability. So each time it's not going to be actually the same answers. If I tick it, you'll see that it might lag, no lag, and it will just keep projecting different results. So what you'll find is the actual numbers themselves will be different, but the overall, is it a profitable system? Is it unprofitable? Is it negative? Is it positive? That's going to stay the same, okay? So the numbers may vary, but the overall profitability of that system will stay the same. But anyway, let's spin it a few more times, and then we'll settle at that. So let's have a look. So the forecasted capital is £216,000, dollars, whatever you want to say, which is pretty good. That means we made $116,000, I'll go with that, and a total profit of 80% in a year, which again is incredible. For anyone that doesn't think that's good, then you've fallen into the trap of the unrealistic expectations of trading, and this is not going to go very well for you. But these two numbers here are really the two numbers that I want to focus on in this video. We have the drawdown in percentage, and we have the drawdown in monetary terms. So you can see one is minus 9% and the other is minus 2,127, right? Now, here's the thing. Here's where most traders go wrong. So you can see we've got the graph over here, and maybe it looks like the drawdown may have been here or here, right? And what you may see already is that this graph here literally looks like a Forex chart, that is in an uptrend or in a bullish trend, whatever it may be, on euro dollar. It looks like that chart. You can see we have the impulses up, we have the pullbacks, the impulses up, the pullbacks, impulses up, pullbacks, impulse up, pullback, okay? The same as a chart. And if you have a trading system that is consistently profitable, this is more than likely, almost guaranteed, what your chart will actually look like. There will be impulses up and pullbacks. Now the problem is, what happens for most traders is when they have, let's say they were profitable for a little bit, price comes up to 143, and then they stall and they start to go and drawdown, and we have this pullback here. What most traders do at this point is, that's it, fuck off the system, fuck off the strategy, off I go to ICT, I'm actually going to learn how to trade properly because this system clearly ain't working, I'm not making enough money. And then they jeopardize that whole strategy, they sabotage that strategy, and then because of that, obviously the charts just change a little bit, but because of that, when they're in this phase here, they give up their strategy and then never get to take advantage of these impulses in price here. They never get up to here because they don't let their strategy actually play out, and they never actually play out their full edge on their system. Because the second they go into drawdown, they start to panic. Like I said, they'll usually panic. They'll start trying to tweak different bits, and they'll go learn a new strategy on YouTube, and then they just set themselves back to zero. They start back down here, and then, again, all that will happen is they'll learn the new strategy. They'll come back up an impulse maybe and go into drawdown, and that's it, new one, and the cycle will just repeat, and they'll never ever get the true potential out of their system. And it doesn't matter if you go and learn ICT, SMC, patterns, indicators. It literally doesn't fucking matter which system you're using if every time you go through drawdown you just fuck that off to go and get another one. Because like I said, we'll do it with a strike rate 80% for any of you are like, oh yeah, but with ICT you would win 80% of the time, which in truth, I don't believe that for a fucking second. I'm not disputing any of that sort of stuff. I don't actually watch any of it, but you know, there's enough student success to see that clearly it works. But what I'm saying is, even with a system that has an 80% strike rate, we can see here, even with that 80% strike rate, we still had a drawdown of -6%, which means at one point you went through a 6 loss streak even with that 80% strike rate, which in truth, I don't believe many traders at all have. Like, that's so unrealistic, and I'll show you the results you would technically get over like a 5-year period with that, and then you'll start to see how, okay, most traders probably don't, which isn't me knocking on traders, because like I said, having a 40% strike can still make you profitable, and I understand that people have to market their trading courses and mentorships to make it look better, and or clickbait for thumbnails, whatever. I get that, and so whatever. But what I'm saying is, even if you had that 80% strike rate, you still could have lost 6 trades in a row. And look at that. I mean, it's changed now to 4%. That's still 4 trades in a row lost. And look at the money you could have achieved, like 1.289 million, starting with that 100% in a year with that 80% strike rate. But look here, this is probably where the drawdown happened. You would have got to 384 and you would have stopped. I mean, to be honest, I'd probably be happy with $384,000 profit anyway, but the point still remains that you could have ended up with 1.289, which I would much prefer, but you would never ever get to that if you stopped down here, which is why it's so important when you go through those phases of drawdown. It's just understanding that it's a part of the game. You're not doing anything wrong. And this is where people get confused, is, oh my God, it's just natural. I'm losing trades, so I must be doing something wrong. I need to go and learn more and tweak and refine and change it. But in truth, no, you're doing nothing wrong if you lose 5, even like 10 trades in a row. It's not a big deal, okay? If you've got that 3-to-1 risk to reward ratio, that's only 4 wins to be back to positive. So it's not a big deal. You just need to understand the principles behind trading, which is something that not enough traders really cover enough. And understand, don't panic, zen it out, calm the fuck down, and carry on trading. I'm just going to quickly show you the results that you could achieve over a 5-year period, okay, with an 80% strike rate, just to emphasize how that's so unbelievably unrealistic. And also, you know, this is with a 3-to-1 risk to reward ratio. A lot of the people on the YouTube and the socials are claiming like, 6-to-1, 7-to-1s, and you know, it's only 10 trades per month. So, yeah, you can see the results are 64 million. And I don't think there's many traders that I've seen on the socials that have that much money, okay? So be wary of people claiming to have strike rates like that. It's extremely unlikely and unrealistic. Or at least that's if they're claiming they take like 20, 30, 40 trades or 10 trades a month at 80% strike rate. That's unbelievably unlikely. Maybe if they're saying, okay, I only take like 3 trades a month, that then would be more likely. The numbers are still ludicrous, but that's a lot more believable, a lot more realistic if they're not taking that many trades because they're filtering out so many to actually gain that higher strike rate. Then yes, okay, I'll hold my hand up and say they can do that. But if you go on the socials and you got someone day trading, they're taking a trade every single fucking day, and they're claiming they've got an 80% strike rate. No. I guarantee you've just seen the numbers are ludicrous, and that is just not happening. But that's just to explain. And I have got another part of the chart down here. So if you, like I said, if you want to download this tool yourself, there's a link in my bio. It's completely free. I'm not going to charge you for that, obviously. And this view here, you can just go into a little bit more depth. You can zoom in. Unfortunately, with this chart, I can't add that that's dollars on the side, so you haven't got the symbol. But just understand that these numbers here are the dollars, and you can literally go through date by date to have a look, and you can zoom in a lot more and actually see the specific days if you want to, February to March, and see how the chart goes up. But again, look, it's literally the same as that Forex charts in those bullish runs, the impulse up, the pullbacks, the impulse up, the pullbacks. So yeah, hopefully this helps you. Hopefully this will help you when you go through those phases, when you lose a few trades in a row and you start to panic. Oh fuck, what do I do? Because the worst thing you can do is just stop taking trades. Because if you stop taking trades, then again, you're still never going to get the maximum potential from your strategy. If you just stop taking trades here, okay, I'll stop here, and let's change this down to a 1 year chart, because the longer the time period, the more smoothed out it's going to be naturally. But let's say you stop here, okay, I'll stop here for trading for a little bit, right? I'm not going to trade for a little bit, and then you wait, you see all the winning trades happening, which is another thing that a lot of traders do. They see all these winning trades, like, fuck me, yeah, I need to start trading again now, and then boom, you start trading here. And then you're like, oh fuck, it's clearly not working, because you were let's say a 4 trades lost down here, and then price comes up, you've watched these win, okay, I can get involved now, and then another 4 losses, and now you've lost 8 in a row just because you didn't take the ones here. So you need to take as many trades as you can that are in your system, regardless of your previous result. Remember that. Don't even think about your previous result. You need to take all the trades in your system, regardless of your last trade's outcome. Don't even think about that. It literally doesn't fucking matter. But hope this video helps. Hopefully next time you go into a drawdown, you're not going to panic, and you're just going to take your next trade, and then your next trade will be a winner. And I'll see you in the next video.